Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Welcome everybody in CPI day. We do have important reading about inflation in United States. So that's the main data that will influence the markets today. This is the whole calendar. Maybe let me show you only the most important numbers. Right, here we are. We started today with the GDP data from Germany, where we got mixed data, as you can see here. 2.9 is expected, 3% here, 2.3 expected, 2.2. In general, data that did not influence euro dollar or euro alone much, because everybody's waiting for the CPI from US anyway. In 1 hour, we will have GDP from Eurozone. Yearly data from Eurozone is in line with expectations, so they're much better in estimating the data in Europe than in United States. Usually, data from United States is very far from expectations. That's funny, actually. And data from Eurozone, we have more countries, and I think it's more difficult to gather this data from Eurozone than from United States. But this data from Eurozone is usually in line with expectations. Also, we'll have retail sales data. If that data will be published alone, that will be super important. It usually is, but today all eyes are on CPI, so I don't think that retail sales data will have a meaning. Well, it will once the CPI will come in line with expectations. If we will have CPI in line with expectations, so here we'll get 1.9, here 1.7, then all eyes will be on retail sales. But that's still to come. Watch out, 4.5 hours for that. Surprisingly, usually before important data, we don't have many trading signals. Traders are waiting for this data to be published to create trading signal, but as I said, surprisingly, today we do have trading signals ahead of CPI data, which can be pretty dangerous for the traders because they can enter the market according to the technical signal, legitimate trading signal, but they can be wiped out from the market because of the macro data. It's usually much safer to trade after the data if there is a confirmation of the technical signal. If fundamental analysis confirms the signal from the technical analysis, it's usually easier and better to trade than when you have a technical signal ahead of before the fundamental event. But let me show you what the price is trying to tell us, right? At the end of the day, that what price is doing is the most important thing, so you never should argue with the price. So I'm gonna show you what the price is telling us right now. First, let me start with American dollar to Japanese yen, because here you remember we were creating the sell signal yesterday, but it was still too early because the price did not close below the green area. I told you that price closing below the green area will be a strong sell signal, because that was a very important support here in April 2017, August and September 2017. January 2018 and in February as well. And the price did close below this area, and close was here, and we even made almost 100 pips at some point of this last candlestick. So that was a quite enjoyable, I guess, short-term, mid-term trading opportunity. I don't want to say it's all gone because dollar may get much weaker, and we can see a further drop here, but it all depends from the CPI. What is today's candle showing us? So far, don't be scared about this hammer. It's not over yet, but so far what we are seeing here is after the bearish breakout of the support, the price is making lower lows and lower highs, which is a confirmation from the price action point of view. So price action tells you that if the next candle after the breakout of the support, so after the bearish breakout, if the next candle will make lower lows and lower highs, the chances that this breakout is legitimate and sustainable, and the chances for a sell signal are much higher. If the price did not make lower lows and lower highs, we would have quite big chances for a false breakout. But so far so good. The price stays above, below the support, currently resistance, and the price still is making lower lows and lower highs. If we won't create a hammer here, that will be a confirmation for a long-term sell signal on American dollar to Japanese. All right, next one is gold. Gold is one of my favorite, and here we also do have a buy. Well, we also do have a trading signal, but not sell, just buy. Why I said also? Because it's also influenced by the weaker dollar, right? Sell signal on American dollar to Japanese yen is pretty direct, but here long position is indirect. So it's influenced by the weaker dollar, but it's not direct selling of the USD. Why we do have a buy signal here? Well, on a daily chart, we defended this $1,307 for ounce, which was a resistance here. And if you will see that a bit better, after the breakout, it became support here and here and here. It's also in the same time 38.2 Fibonacci level, right? We do have those black Fibonacci lines. So price being above 38.2 is still is good for the buyers. And also recent correction is shaped like a flag or a wedge. It doesn't really, there's no big difference here. And price breaking the upper line of the wedge actually triggers a buy signal. So we broke the upper line of the wedge. So the buy signal, according to the technical analysis, is on. The buy signal will be on as long as the price will stay below the blue area. Blue area is now like the ultimate support for the midterm uptrend. Next one is S&P 500, where we are pretty shy. We're slowly trying to reverse and erase the recent panic which we got in the beginning of February. Nobody should be surprised with that, because that's another time when American indexes are trying to create a V-shaped reversal. They love V-shaped reversals in America, and in the past few years, especially on NASDAQ, but on other indexes as well, they created several V-shaped reversals. So a strong drop, not as strong as this one, but still significant drop, and the price did not stay close to lows too long. the price reversed quite fast and quite significant, quite strong. That strong that they usually were making new. Oh, they always after that they were making new higher highs. So that's pretty significant. If the price did that several times before, the chances that this type of action will continue are much higher. And we do have a clear support here established with those two candlesticks with long tails. So horizontal support is pretty clear, and it's around 2,530 points. As long as we stay above the green area, the sentiment is positive. Price breaking the green area, so price closing below the green area, should trigger us a sell signal. Let's check what's happening in Bitcoin. And Bitcoin is struggling. The volatility in Bitcoin actually disappeared. We had this correction here shaped like a wedge. I thought that this breakout should trigger us a sell signal, but I think we need to readjust the wedge here because that wasn't a significant sell signal. And so there is still a bit of buying pressure. But as long as we stay below the green area on a daily chart, I don't care about what's happening on lower charts. On a daily chart, as long as the price do not close a day above the green area, there is still a negative sentiment towards Bitcoin. Once the price will close a day above the green area, that will be a buy signal with a potential target of $11,000, which is around the yellow area. So that's the situation on the Bitcoin. Again, as long as we stay below 8.7, we should aim 6,000. If we'll break 8.7, we should aim for 11,000. FTSE also is looking good. On the S&P 500 we defended important supports, but on FTSE we also defended important supports. This one here on around 7,000 points. And let's say 7,100 points. And as long as the price stays above the blue area, the sentiment here is still positive. Now DAX, let's look at DAX because, dollar index, because since the 12th of February, dollar is much weaker. And now we are, this one. And now we are aiming super important support for the midterm. Situation here. It was created by, it was established like at the end of January. So first it was a resistance, then it was a support, and it's support again. Obviously just the fact that the price is here on the support won't defend the price if the CPI will be lower. So again, we have to remind you about the CPI data, which will be published later in the evening. Evening. Depends where do you live right now. I'm talking from the Malaysia point of view, from the time in Kuala Lumpur. And, the situation is definitely negative on dollar index. Does not look good. I thought that they're gonna test this green area, but they are not willing to do that. So if they don't want to go up, they should go down. We'll see. Australian dollar to Canadian dollar. You see, that's why I told you that it's not the best sell signal in the world. On paper, it does look good because on paper it was a double test of the resistance. So here and here. But yesterday we tested this resistance third time, And when the price tests something twice and do not really make a reversal, but approaches that third time and fourth and fifth, as you can see, 1, 2, 3, 4, 5, and that is buying pressure. That is a actually signal of the buyers approaching the market and buying more and putting pressure on this resistance. Also, well, maybe not the greatest, not the prettiest one in the world, but okay. See what I'm drawing here. It's a smaller inverse head and shoulder formation. And if the price will close the day above the green area, this green area, that will be a nice buy signal on the Australian dollar to Canadian dollar. Now, New Zealand dollar to American dollar. Here we also do have a creation of a buy signal. Healthy, beautiful uptrend since the end of November, since the half of November, triggered by this inverse head and shoulder formation. So left shoulder, head, and right shoulder, and then the price creates a beautiful upswing, which is corrected just recently by the flag formation. So this is a flag formation. Remarkable is that the price bounced from 38.2, which just is another proof of how 38.2 Fibonacci level should be important, well, is important. And from this, you should know that it works not only from this, but this is like another example, another, not the first one, not the second one, but another example when 38.2% Fibonacci works and works like a charm. And after the breakout, which is another thing which is remarkable here, is that we broke the upper line of the flag or wedge, because those two lines are not exactly parallel. But after we broke the upper line of this formation, we tested that as a support. So broken resistance is tested as a support, and then we break 23.6 Fibonacci, and then we are making new highs, which makes it a decent buying opportunity. It would be awesome trading setup, just if not the CPI data, which can destroy everything. Much bit or a miss of the data can trigger a very, very strong reversal, which will deny even the best technical setups. Cable is having a similar situation to, for example, like gold or kiwi. But here on cable, we still don't see the breakout of the upper line of the correction pattern. So yes, we kind of see a defense of major support, this green line, which is a major long-term support. But for the proper buy signal, what I would like to see is the price on this checkpoint, which I showed you yesterday. So price on this checkpoint will be a nice buy signal. That would mean the comeback above 38.2 Fibonacci level. That would mean a definite defense of this horizontal support. That would mean a breakout of the correction pattern. So yeah, if you want to go long on cable, I think that waiting for the price to get to the checkpoint would be quite nice idea. Euro to British pound, sideways trend, not much of my of the place where I would like to be. I'm a trend follower, trend trader. I don't like sideways movements. We are closed below the horizontal support here, the horizontal resistance here, horizontal support here. So not my type of trading. WTI is aiming this 55.1. I am expecting that the price will get there. I told you about the recent interview for one of the magazines here, and they're writing an article about the commodities. And I said that I would welcome the price of the oil on 55.1, where is ultra important horizontal support, and from here we can climb for new highs. That would be a very nice technical movement. DAX is doing the same, like those indexes, they follow each other, right? Obviously American indexes are leaders here, but they follow each other. And S&P 500 defended supports, FTSE defended supports, and DAX also defended supports. Like here, the main support right now is 11,900 points, which is labeled with this red color. And the potential target for this bounce is 12,900 points. So there's 1,000 point difference between this support and this resistance. As you can see, 1,000. And it seems that red support is defended, and all eyes are on the orange area, where we should get relatively soon, I guess. Australian dollar to New Zealand dollar. Look at that. That's a long-term head and shoulder formation. This is a left shoulder, this is a head, this is the right shoulder. We got a breakout of the neckline. This is this gray area is a neckline. So we broke this support. This support, later we used that as a resistance, we used that as a resistance again. The price created another support. Now look that. Well, we need to adjust the support to the recent market conditions. Right. And here. So we had enormous head and shoulder formation, which created a sell signal here. Here we got a confirmation, another one. And after head and shoulder formation, what we get is descending triangle. Descending triangle is bearish trend continuation pattern. So if it's happening in the downtrends, it gives a signal for a further drop. How come? Well, that's a horizontal support, that's a dynamic resistance. And we can see that with every bounce, those bullish movements are smaller. This one, 140 pips. This one, 87 pips. Let's say this one, 50 pips. Right? So we are seeing increased pressure on the support and decreased demand. How to trade this? You usually in descending triangles, you wait for the price to break the lower line of this triangle and you enter with this movement. If you are late, you can wait for the price to come back. Like the best, what I would love to see would be something like that. Here, here, you can buy here, but if not, maybe the price will reverse here and go like that, where you will be able to buy here, for example. Okay, that's how usually a descending triangle should be traded. I have this position on my account, so I opened short position before the descending triangle formation was created. I traded this bounce from the neckline. American dollar to Canadian dollar, pretty boring sideways trend for the past few days. We are waiting for the situation to develop, but in the long term it's a sell signal because the price created a shooting star on a daily chart, on a major downtrend line, and on a major horizontal resistance, and on a major Fibonacci line. So that was like the area of pain for buyers. That's the end of their game. That's a good buy for buyers, invitation for sellers. The price went there and sell signal got created, which in my opinion is still on. But again, it's a pair with dollar. We're gonna have a CPI, which will definitely strongly influence the American currency. So all eyes are on that. Australian dollar to American dollar bounced from an important horizontal support, but I do not have a trading signal here for you, unfortunately. There is American dollar to Singaporean dollar. This is very technical, because on a weekly chart you can see that we had a huge decline in 2017. Like the Singaporean dollar got very, very strong. And on end of the year, the price broke this ultra important horizontal support, which was created by the bottoms from 2016 and 17. So we broke that. We went significantly lower. But after that, the price decided to test that as a resistance. So broken support becomes a resistance. How many times you heard this? I heard this and I even told this. I was saying this even more times. I guess like hundreds of times, because it works and it's one of the main principles of the price action trading. That broken support becomes a resistance, broken resistance becomes a support. And that's what you are seeing here. Especially, it's a good trading occasion, especially if we are locked in the channel down formation. And as long as we are in the channel down formation, the sentiment towards American dollar to Singaporean dollar is definitely negative. Euro dollar. What is going on euro dollar? We created a head and shoulder formation, inverse head and shoulder formation, left shoulder, head and right shoulder. We broke the uptrend line, the downtrend line here, and from this we came back above two major supports. So everything shows you the same. There is a sell signal for dollar, there is a buy signal for everything else. Even euro dollar is showing that, but I don't like the current situation on euro dollar, so I don't think it's super strong. There are more interesting pairs than this. Euro to New Zealand dollar, no. American dollar to Swiss franc will be the last pair that I have for you, because it's very similar to American dollar to Japanese yen, right? Look at the blue area. That's a horizontal support since the October 2015. It were yearly lows in 2016, yearly lows in 2017, and in 2018 those lows got broken here. And then again, broken support becomes what? Broken support becomes resistance. And that's what we are seeing right here, right now. We were testing this this broken support as a resistance. This test was positive for sellers. The price even broke the mid-term, short-term uptrend line. And this bounce, this breakout, it all creates a strong sell signal. But again, those are technical signals. Beware of CPI today. So technically, we do have a beautiful market right now. So many good trading signals. But watch out for the CPI. It can all eventually change. And I do have 3 positions right now. 2 of them I have with American dollar, so I will have to sort this out before this data. Maybe close part of the position, for sure protected with orders. I think they are all already on the break-even point, so no worries. But definitely some action should be taken. So guys, thanks very much for attending daily analytical report. I'm very happy that you join us, and you can see that yes, we know how to trade and we are sharing our views. So thanks very much. If you want more, visit our Twitter account and our website alpari.news.